Good morning. It's June 6th. And if you woke up today wondering whether this is just a dip or something worse, the data has already answered that question. Bitcoin is testing $60,000, not flirting with it, testing it. ETH is trading at $1,570, deep in a structural void with minimal volume support. And over the past 48 hours, we've seen $1.6 billion in liquidations across the market, 85% of them longs. This is not a routine sweep. This is an aggressive markdown, and the macro tide data is telling us something most people don't want to hear. This is structural, not cyclical. Let's break down exactly what the order flow is saying. Let's start with the big picture, the macro tide. For those new to the Nexus framework, the macro tide is our proprietary measure of cumulative CVD weighted by institutional flow participation. When it drops below risk off thresholds, it doesn't just mean be careful, it means pull all discretionary longs off the board. BTC Macro Tide is at minus 2.41 million delta. The safety floor is minus 720,000 delta. We are 234% below that threshold right now. ETH Macro Tide is at minus 1.039 million delta. The safety floor is minus 200,000 delta. Same story. Deeply negative, no reversal signal. This is the kind of reading you see before major structural breakdowns, not intraday wicks. Every bounce since Wednesday has been met with immediate institutional selling, what we call absorption scalps. The CVD profiles confirm it. 1 hour sequences are printing consistent negative delta across all tier one assets. The question isn't, are we going lower? It's where is the next bid wall that will hold? Let's get specific about levels. BTC is trading at $60,995, just above the psychological $60,000 handle. And the order book shows a thick ask wall overhead, targeting a flush of the $59,500 bid shelf. That's the next major downside target. If that goes, we're looking at a vacuum down to $56,000 or $57,000 before we find any meaningful support from high volume nodes. ETH is trading at $1,570 in what we call a high velocity markdown phase. The liquidation cascade below $1,800 has already triggered, and tier 5 bid walls are being used as exit liquidity for institutional shorts, not reversal points. Key resistance is clustered at $1,665.95. If we see that level reject, $1,400 becomes the next target. Sol is trading at $62.74, targeting the $61.50 structural floor. The 50-period EMA trend filter is actively inhibiting longs. UTBot V1 is in an active sell position. SOL is the weakest of the three right now in terms of recovery velocity. Here's where it gets interesting and dangerous. Despite this price collapse, annualized funding rates remain positive at 10.5% to 23.6%. What this tells us, there's a high concentration of trapped longs, traders who open positions before the breakdown and are now paying carry to shorts every 8 hours just to hold their position. This provides a structural tailwind for further liquidations. Every funding period that passes without a recovery is another amount drained from long positions. At some point, those positions will capitulate, and that capitulation becomes fuel for the next leg down. This is the reason all our active strategies have shifted to 1.5 times to 3 times ATR-based stop losses to survive the funding related spikes without getting shaken out of shorts. So what do we do with this information? Three things. One, all long signals are vetoed. UTBot V1 is vetoing longs across BTC and ETH. SOLs UTBot V1 is active on a sell. Do not fight the macro tide. Two, structure for bounces, not reversals. The CVD divergence that would signal a genuine reversal isn't here. Minor bounces are short covering events, not accumulation. If you're trading size, use virtual traps, limit entries, place just above high volume bid clusters to ensure execution before the liquidity is absorbed. Three, Watch the $59,500 bid shelf on BTC. If it breaks, we're entering a new regime. If it holds, expect grind, not a reversal. A grind, the risk reward for scalping longs is below 1 to 1. The risk reward for continuation shorts is still favorable. Our tofu concept this week is the mechanics of virtual traps, how to front run institutional bid, walls and structural voids. Full breakdown coming in the article release. To sum it up, regime is an aggressive markdown. Macro Tide is deeply negative across all tiers. Strategy is shorts only, wide stops, zero long exposure. Key level to watch is the BTC $59,500 bid shelf. If you want to stop staring at charts, stop letting emotion dictate your capital, and let an entirely autonomous entity navigate these matrix environments for you, listen up. We are opening up active deployment slots right now. You can launch and deploy your own autonomous Nexus trading agent completely free for the next 7 days. The official access link is right below in the video description. Set it up, connect it to the terminal, and let it run. That's your Nexus morning brief for June 6th. We're live in the Nexus quantitative community all day. If you see something in the order flow, flag it. Hit that subscribe button for daily post-market telemetry reports. Drop a comment with your target assets, and I will see you on the next block. Stay sharp, stay liquid, don't catch falling knives.